What's happening, guys? Welcome to SDIRA Live, where we talk passive wealth. Today is exciting. Today is our first episode where I have a special guest, which he is here to talk cryptocurrency and retirement accounts and all the great stuff that goes along with getting into the crypto game and building retirement. It's taken a little while for me to get my first guest on the show, and that's mainly because I want to bring you nothing but quality content and good, solid education. And I wanted my first guest to really make a difference and really hit home to some of you out there. That's why I'm excited to introduce you to our guest that has an incredible resume with the self-directed space, with retirement, with tax, with building wealth. Mr. Adam Bergman is a Forbes contributor. He's featured in Bloomberg. He's been on several network television shows. He is a published author. He has, I think, like 8 or 9 books in the industry now. He has his own trust company. He's an attorney. This guy. He does it all. I mean, if there's one guy you want to talk to in this space, it's Mr. Adam Bergman. And I have learned. I've been following him for several years. I haven't actually met him or spoken to him until a few weeks back when I started putting together my guest list and putting together my shows, and the first person I wanted was Mr. Adam Bergman, and I am thankful that he has agreed to join us today and talk about the crypto game and retirement accounts and what it takes to get into it. He does have a new book coming out in a couple of weeks called How to Use Retirement Funds to Purchase Cryptocurrency in a Nutshell, and that does go in along with several of his other books that he has available. So this is very exciting. I'm not going to waste any more time. Let's talk to the guy. Let's see what he's got to say. So let's do it. So Mr. Adam Bergman, thank you so much for joining us today. It is an absolute pleasure, and I'm so excited that our listeners get to meet you and hear from who I consider the man and the expert in the self-directed space, whether that has to do with cryptocurrency or retirement accounts or tax law. There's nobody better to have on than you. So thank you so much for joining us, and let's kick it off by talking about this crypto craze. What in the hell is going on with the crypto craze, and what do you think about it?
Well, John, again, thanks so much for having me on the show. It's really an honor. I'm really excited. The crypto craze is really exciting for me. I'm really something I'm really passionate about. We've seen our business increase considerably. We're actually moving to a bigger space next week because we need to hire so many more people to handle all the clients that are interested in using their retirement funds to buy crypto. And again, for me, it's super excited. I love the technology. I haven't been this excited really since the late 90s and the internet, where I would debate it with my father about the future of finance and how I thought the internet would change everything. I do believe cryptos will be what the internet was. I'm not sure if it's going to be more of a back end solution where you and I may not see the inner workings of it, but I think it's going to change things over the next 10 years. And I do think you're going to see some decentralization in some currencies, unlike the US dollar, digital currency that's going to be used maybe on Amazon, maybe at McDonald's, but certainly in financial transactions as well.
Well, it's interesting. This is really unprecedented. This is a new thing. I've never seen such a craze before. I keep saying craze because it really is. It's a craze. People are going crazy. And it's you're seeing all this other stuff pop up now. I mean, all the different coins now. I mean, there's not just Bitcoin. There's hundreds and hundreds of coins. How many coins are out there now?
Obviously, there's tons of more coins now, from Ethereum to Ripple to Dash, Tron. I mean, there's 1,400 or so coins out there, and they keep coming onto the market, whether it's through initial coin offerings like Kodak, even Overstock.com just did an initial coin offering, or just new coins coming on that have really super exciting technology.
Well, all right. Let's talk. Let's talk about ICOs a little bit later, and let's take a step back here. What is cryptocurrency, and how does it work?
Really, the technology behind these cryptos is something called blockchain. And blockchain really all it is it's a ledger system that really confirms transactions. And that's what's getting a lot of people excited, because people are expecting it to revolutionize financial industries, even title, the way title is being documented for real estate transactions. So that's really it. And cryptos is just a digital asset. It's just ones and zeros. So it's not something you can touch. It's not tangible like a dollar bill or a coin. So the way to hold it is you can hold it on an exchange like Coinbase or Gemini. Those are the two most popular exchanges where you can turn what's called US dollars or fiat into cryptocurrency. And it's actually pretty easy, and we'll talk about how it can be done and how it can be done with retirement money. But once it's on, once you purchase the Bitcoin or the Ethereum or the Litecoin, Bitcoin Cash, then you can hold it on the exchange, or you can hold it in what's called a wallet. And you can do it in a digital wallet, like online, and also a hard wallet, like a USB, which I like and is more secure. So it's super easy to do. The application's really easy, and in a few days you can be ready to purchase cryptos. But really, what is getting people excited is that it's really a decentralization of the financial markets, because prior to cryptos, I mean, if you were born in Canada, the United States, or Europe, you were really subject to the currencies of those countries. Now it's kind of erased borders, and you can be in China or Canada or the United States and really use Bitcoin or Ethereum to transact.
There's a lot of talk of crypto being unregulated, right? But that's really not the case, is it? And a lot of people don't understand that. Is cryptocurrency taxed by the government? If you're buying and selling it, or if you're using it, do you pay tax with cryptocurrency?
Basically, prior to 2014, no one really knew how cryptos were going to be taxed, because no one on record, the IRS, no one came out and said what cryptocurrencies is. Is it a collectible? Is it property? Is it currency? No one knew. So finally, in notice 2014-21, the IRS came out and said, okay, cryptos are property from a tax standpoint. And that's important, because now we know how it's taxed. Obviously, if they treat it as a currency, which no one thought they would, because that would undermine the US dollar and probably put us into a revolution. So we all knew they weren't going to come out and say, yeah, this is a second type of currency, which obviously they don't want competition with the US dollar, and no country wants competition with their currency. So property was the safest approach, and it's probably the more accurate approach. What is property? Okay. Property basically could be divided into three categories: personal property, investment property, and business property. All personal and investment property is subject to what's called capital gains. And capital gains, if you haven't heard about or you're not sure about it, it's really when you buy and sell a piece of property like stock, or like a mutual fund, or like a bond, or like a television, or like a piece of real estate. That is considered a capital gain. And capital gains can be short term, under 12 months, you hold it, or long term, over 12 months. And the capital gain regime is very attractive because it's a 15% tax rate. It goes up to 20 and 23.8 thanks to Obamacare once you're over 450,000. So it's 15 or 20% or 23.8, whereas his ordinary income, which is 37% under the Trump tax plan. So you can see the distinction. So if you hold the cryptos less than 12 months, just like you hold IBM stock less than 12 months, you're going to be hit with capital gains, which is, if it's long-term over 12 months, 15%, let's say. If you hold the capital asset, the crypto, less than 12 months, you're looking at ordinary income tax rates, 37%. So 95% of crypto investors, if you do it without retirement money, you're going to be in the capital gains world. So if you hold it less than 12 months, you're looking at ordinary income tax rates, which is what you pay tax on when you earn income, which the max bracket now is 37%. Or if you hold it 12 months and a day or longer, you get capital gains long-term treatment, which is now 15%, or it's always been 15%. The Trump tax plan didn't change it. So 15 or 23.8 if you're a high net worth earner. So you can see a huge distinction. People want long-term capital gains. Now with cryptos, that's somewhat difficult because of the volatility. I know a lot of my clients aren't holding them at least 12 months. A lot of times it's more short-term. So that's something to keep in mind. So if it's less than 12 months, short-term capital gains, ordinary income tax rates. Now the IRS lets you net short-term capital gains against short-term capital losses, long-term capital gains against long-term capital losses. So you basically pile up all your transactions at the end of the year and you net the short-term gains against the short-term losses of any, long-term gains and long-term losses of any, and you get your number. And that's what you put on your tax return to determine if you pay in 15 or 23.8% if you're a high net worth earner, or 37% or so income tax. So again, that's why short-term, long-term is so important. And that's why it's very, very complex if you buy cryptos with personal non-retirement money, because you got to keep track of what you paid for it, which is called basis, your holding period, how long you held it. Is it less than 12 months, longer than 12 months? And then what you sold it for. Now, one question I get is an exchange, let's say I exchange Bitcoin for Ethereum or Bitcoin for Litecoin, is that a sale? And the answer is yes. When you exchange one coin for another or a coin for service, it's like you sold it. So now you got to figure out if you bought Bitcoin at 10,000, okay, and now you traded it for 2 Ethereum coins worth 12,000, guess what? You got $2,000 of gain. So now you know your gain, you got to figure out your holding period. And now your basis in the Ethereum coins are, let's say 12,000. Same thing as if you exchange the Bitcoin for services like legal services or web development services, you got to figure out what you paid for it, how long you held it, and what you got in return. So for a lot of a lot of investors, that's work. And I get, I've written a bunch of articles for Forbes, so I get multiple calls a day where people are saying, oh, do you do taxes for crypto? I will pay you anything you want. Can you take care of this for me? And I, of course, advise them to go find an accountant. But that's where people are at. They're now having to backtrack and figure out what they paid for the crypto, what they sold it for, how long they held it. Thankfully, there's some good apps that are coming on the market and also some wallets that are going to be able to help you track this stuff. So it will get easier and better, but it's still kind of difficult. So that's if you hold cryptos for personal or investment purposes, which is 95% of people. What happens if you hold it for business purposes? Well, under 2014-21, basically the only way you can hold it for business purposes really is if you consider yourself a day trader or a trader in cryptos. And there are some people that are doing that, but most people are not considering themselves a trader in cryptos. Or if you invest in a mining company. So basically, what's mining? So remember I talked about blockchain. Mining is the way you confirm the transaction. So let's say I have a Bitcoin, I'm going to transfer it to John. Before I actually send the Bitcoin to John, it goes out to a network of miners. And then they look at my public address and my Bitcoin address. And then I transfer it using my private key. So you have a private key, a public key, and an address. Oh, and the address is generally the public key. So if my private key is like my keys to my house, it basically signifies that I own it. So once I transfer the Bitcoin to John, before it gets to him and his wallet, it goes out to a network of miners. And these miners are basically people all over the world. They used to be in China. Now they're coming to Canada. And because China's kicking the miners out. And basically these miners are just using these supercomputers, kind of like the Matrix, that are solving these mathematical puzzles, algorithms, and then they get Bitcoins for solving them. And then when they solve it, it goes onto a blockchain and a ledger. So it's confirmed that I sent my Bitcoin to John and we have a ledger of it. So we know it happened. And that's what people are excited about the blockchain. So there are clients that invest in mining companies or do mining themselves because it is supposedly profitable. That's a business. And 2014-21 IRS notice said, you got to consider that business income. And if you're self-employed, you'll pay self-employment tax on the business income. If you're a C Corp, you'll pay corporate tax. If you're an LLC, you'll be subject to pass through income taxation. So all in all, if you're holding cryptos personal or investment purposes, you're in the capital gains world. Short-term under 12 months, long-term over 12 months. If you are mining or consider yourself a trader, an active trader of cryptos, you're in the business world, and then you're subject to either ordinary income tax as a sole proprietor, single member LLC, or corporate tax. So that's really the taxation of cryptos from a personal investment side, non-retirement money. So, and that's obviously a lot of people that are dealing with this stuff. And as I mentioned, it's tax season is approaching, and people are getting a little bit nervous because there was a summons issued by the IRS to Coinbase, and they sent a summons. It's called a John Doe summons. I actually worked on some John Doe summonses in the early 2000s when the IRS was looking at tax shelters, and they would send these to accounting firms and basically say, send us all your clients who did these things. And the accounting firms would fight it, and they would lose, and they would turn over the names because the IRS is very, very, very broad summons power, and they get what they want. So they issued a summons to Coinbase because they did a study, and they found that in, I believe, 2015, so the 2014 tax year, only less than 900 people reported that they supposedly reported that they had capital gains on cryptos. Now, some people say that number is a lot larger. It's just a lot of people didn't notate cryptocurrency on the capital gain schedule. They just said capital gains and reported it. Either way, they were worried, IRS, that not a lot of people are reporting this stuff, and obviously they're concerned and want to make sure that people are paying taxes. So they issued this John Doe summons to Coinbase and basically said, give us all your clients' names because we're going to audit you. And Coinbase fought, and they actually were a little bit successful, and they were able to reduce the scope of the summons down to just Bitcoin and 20,000 or above accounts. So the IRS has gotten all these names, and any crypto investor is aware of this John Doe summons, and a lot of people have used Coinbase because it's a quite popular exchange, an easy way to get fiat into crypto, and the IRS, I'm assuming, is in the process of reaching out to these taxpayers. So that's getting people nervous because they know the IRS is going to find them. And whether you use Coinbase or Gemini or different exchange, the IRS will probably issue these summonses to multiple exchanges because they want to know what is going on in this space. Obviously, with the volatility and the increase in value in these cryptos in the last year and a half, they expect a lot of tax revenue to flow in to them. So they're concerned. So that's why people are nervous.
Okay, so just to be clear, cryptocurrency is taxed 100%. There are no loopholes. There are no ifs, ands, or buts. If you are investing in cryptocurrency, you have to pay tax. Is that correct?
Oh yeah, it's taxed already. Yeah, they're going to treat it as property, and they want the IRS wants their tax money. Absolutely, it's going to be taxed, and it's already taxed. The IRS has clearly said under Notice 2014-21, it's property, so it's going to be taxed like capital gains. If you buy a Bitcoin for 10,000, you sell it for 11,000, and you held it less than 12 months, guess what? You owe ordinary income tax rate on the $1,000. If you hold it more than 12 months, capital gains, 100%. This is big money for the government. There's nothing the government will let us do without tax. So it's a great, one thing I wanted to add is I get a lot of questions to say, oh, I'm just going to do a 1031 exchange with this stuff. You can't. Okay, this isn't real property. If you read the tax code, go to the section 1031, you'll see there's exceptions for stock securities. It doesn't apply to 1031. Some people will say, well, it's not a stock or security. Well, it's not real property either. So 1031s don't work. You can't just exchange 2 Bitcoins for an Ethereum and never pay tax. It's not the way it works. So it will be taxed. It is being taxed. You need to pay tax. If you're listening or watching this and you bought cryptos with personal money and you have gains or losses, you use it and report it. Again, the advantage of losses, I don't know if anyone has losses, but if you started buying them at the end of December, you may have some losses. You can offset $3,000 of capital gains against your ordinary income. So if you have some losses, report it, take it. And if you have gains, report it because the IRS will find you and they're not going to be happy if they found out you underreported. So some people say, well, they'll never know. How are they going to know? I've done 600 trades. They'll never find out. You know what? The onus is on the taxpayer. It's your job to report and display what you've done. If you can't prove it accurately, the IRS will treat it as a taxable transaction. They can impose penalties and fines, and interest on all that. So it's best to report it. It's the way the system works, whether you earn income, whether you trade stocks or cryptos or anything, you have to report it.
Let's get into the exciting part of cryptocurrency and really why you wrote your book, and that is investing with retirement accounts. What is so great about using retirement accounts when you're investing and when you're trying to build passive wealth?
when you use an IRA or 401k to buy cryptocurrencies, or if you buy stocks or mutual funds or real estate, the beauty of retirement accounts is tax deferral. Or in the case of a Roth IRA or Roth 401k, is tax-free growth. And that's really the heart of why you use retirement money. So in order, when the IRS and Congress created our private pension system and retirement system, they needed to incentivize people to save, because if there's no incentive, we know we're really not very good at saving. So they basically said, okay, in the 70s, they created IRAs and basically said, okay, we'll give you a tax deduction if you make your contribution, which is incentive, because if you put in money into your IRA, this year it's $5,500 or $6,500 in 2018, you get a tax deduction, which is great. You reduce your taxable income. So that's incentive number one. Incentive number two is your money's growing without tax, and that's called tax deferral. So, and that's really any tax attorney, that's the first thing you learn is compounding returns. That's, you always want to defer taxes. You don't want to pay them, but if you have to pay them, you want to defer them. That's how you get wealth, and that's what retirement accounts do. And basically, compounded return. If you get 8% every 8 years, your money doubles. So you can just do the math. If you start putting money into your retirement account at a young and do it consistently, you'll have a lot of wealth when you're older. So, and then the Roth IRA was created in 1997, and basically is kind of a twist on the traditional IRA. And it basically says, okay, you don't get that tax deduction up front, which the IRS isn't super excited about, because they don't love when you reduce your taxable income. They'd rather you pay a lot of taxes up front, because the government is concerned about budget, and they're not looking 30, 40 years down the road when you retire. They're looking 4 years. So the Roth is even though it's more taxpayer friendly, and it's a way better, I think, retirement account for taxpayers, the government actually enjoys it more, even though it's to their detriment, because they are looking 4 years or 8 years ahead, and they basically are happy that you are not taking tax deductions. You're going to pay your tax. But the beauty with the Roth is, once you're 59 and a half and the Roth's been open at least 5 years, you never pay tax on the money again. So obviously it's pretty exciting. I'm a big Roth guy. I've written a book on a Roth IRA. I have all my money in Roth. That's just my personal preference. Obviously, the younger you are, I think Roth has more power. Older you are, probably less power because of less deferral opportunities. But either way, there is the power of deferral or tax-free growth.
So retirement account sounds fantastic. Let's talk about what you can't do. A lot of us know about prohibited transactions, and we know that there are things the IRS does not allow to get those benefits by using a retirement account. So what are some of the things that are big no-nos when it comes to retirement accounts?
So when it comes to retirement accounts, there's basically three things you can't do. Okay. You can't buy life insurance in an IRA. You couldn't in a 401k. You can't buy collectibles like art. And you can't, under Internal Revenue Code section 4975, you can't do self-dealing transactions, which basically means you can't do anything that personally benefits you or a lineal descendant, parent, child, spouse, daughter-in-law, son-in-law, or any entity associated with yourselves. So i.e., you can't buy a house and live with it with your IRA. You can't take your IRA and take your kids to Disney. You can't take your IRA and buy yourself a car. Whatever your IRA does has to benefit your IRA. Why? Because the IRS is basically saying, listen, if you're going to use the money to personally benefit yourself, like pay off your mortgage, your credit card bill, then take a distribution, give us the tax money, and do what you want. But if the IRS doesn't protect the distribution rules, people are going to blow out their retirement accounts and never pay tax. And obviously, that's a double whammy for the IRS, because they gave you a tax deduction up front, and now they're not getting the tax revenue on the back end. Not a good situation for the Treasury. So they have to protect the distribution rules, and that's why they want you to only do what's good for the IRA. Beauty of cryptos is now we know it's a property, thanks to 2014-21. So we know you can do it. It's not a collectible. It's not life insurance. So we know you can do it. Cryptos, unlike real estate, very hard to do self-dealing. I mean, unless you're using cryptos to kind of pay for services you're going to use personally, or you're selling Bitcoins to yourself or a lineal descendant, you're really not going to get into any prohibited transaction issues. So it's pretty clean from a self-dealing and IRS perspective. Whereas real estate, it can get messier in terms of services being performed, what you can and cannot do. A little bit messier. Still, fine to do, but much cleaner. Obviously, if you buy more passive investments like stocks or cryptos.
Well, it sure sounds like using a retirement account is going to be the best way to get into cryptocurrency if I'm buying it to diversify my portfolio or to invest in it long term. How do I do it? How do I get started? And what does it take?
So how do you buy cryptos with a retirement account? It's actually pretty simple. Um, there are generally, obviously the self-directed IRA and the 401k are really the two vehicles people use, IRAs and 401ks, to buy cryptos. Those are the two most popular, obviously, retirement vehicles. So let's start with the self-directed IRA. With the self-directed IRA, there's really two types of self-directed IRAs. Number one, there's a custodian-controlled self-directed IRA, where the custodian, let's say IRA Financial Trust, is the party that will make the investment. So you have to go to IRA Financial Trust and say, please buy property A, and they will sign all the closing documents, and they will send the money to the seller. And the title of the property would be IRA Financial Trust Company, custodian for the Adam Bergman IRA. And that works great in real estate, or if you're doing private equity or hedge funds or hard money loans, works really well. But if you're using a full service custodian to buy cryptos, not so well. Why? Because as I mentioned, the beauty of cryptos is decentralization. So you want to have control over your cryptos. And as we talked about earlier, when it comes to cryptos, you have a public key, which, think about the public key as like your house. You have a Bitcoin address, let's say, which is let's say the nugget of gold inside your house. And you have your private key, which is the key to your house, which only you can get into that house to take the gold. So if you are having a custodian purchase your cryptos, in most cases, you're giving up that private key. And if you read anything online, the first thing you will read is do not give anyone your private key. That's like giving someone your ATM password or your keys to your house. You would never do that. So why would you give someone your private key? As a trust company owner, I can tell you, I don't want your private key. I don't want that liability. I don't want, God forbid, I get hacked by someone and someone takes all the private keys and steals all your money. I don't want that. I want my clients to be safe. So I don't think the custodian controlled approach works really well for cryptos. I wish it did, because it probably reduce some costs, but it just doesn't, because the whole nature of cryptocurrency is that you have control. Just like you can go on Fidelity and buy and sell mutual funds or stocks in a self-directed IRA. Same with cryptos. Cryptos is a decentralized digital asset where you want to be you want the power to be able to purchase, sell, or exchange it anytime you want. These are 24-hour markets. And most of all, because of the private key concept, you need to hold that private key. You can't give it up to someone. So we use what's called a checkbook control, or we call it a wallet control IRA. And through the wallet control IRA, really all that's happening is a special purpose LLC is set up. So I'll break it down in steps just to explain why an LLC is used. So step one, you would set up an IRA account at a trust company, let's say IRA Financial Trust Company. Step two, you'd roll your retirement money, let's say $50,000 from Charles Schwab to IRA Financial Trust. Step three, you'll set up an LLC. And you can set up in any state. We'll help you do that. You'll then open a bank account for the LLC. Call it anything you want. You'll then provide, step four, the bank account info to the trust company. Step five, they'll wire the $50K from the trust company to the LLC. You'll have an articles, you have a tax ID number so you can open the bank account. And you'll get an operating agreement that shows the IRA is the owner of the LLC. And that's called a special purpose entity. In most cases, if the LLC is owned by one IRA, it's a disregarded entity for tax purposes. So it's very clean. There's no federal tax return due. And from a tax standpoint, the IRA is the owner. But you still get limited liability protection if you're interested in it, although in crypto is not super important. And then from there, use the manager of the LLC. Step six, you'll go open let's say a Coinbase or Gemini account at an exchange. You'll open the exchange. Like Gemini and Coinbase, you can each open institutional accounts in the name of the LLC. With Coinbase, it's called a GDAX. And Gemini, you can ask for an institutional account. There's paperwork to be completed. You'll then link it to your bank account. Your LLC bank account, not your personal, your LLC bank account. And then you'll be able to move that $50K into, let's say, Coinbase. And then from there, you decide what you want to buy, whether it's a couple Bitcoins, Ethereum, Litecoin. And these exchanges, generally, they only let you buy 3-4 coins. So if you are looking to buy some of the smaller coins, what you can do is then go from Coinbase, let's say you buy some Bitcoins, Then you can put it on a wallet, and then from there you can exchange it for Ripple or Dash or other Tron or other coins at different exchanges. So there's ways you can get in through Coinbase, get the US dollars into Coinbase. Coinbase, you buy the cryptos, and then from there you can move it to a wallet, and then from there you can exchange it for other coins on other markets. Or if you don't want to go through Coinbase or Gemini, you can go directly to some of the other exchanges that'll have more of a selection of coins. Although, again, Gemini and Coinbase are they're just more well recognized. So some people feel more secure with them, because there has been in the past, like Mt. Gox was an exchange and it went bankrupt, lost $50 million, people's cryptos. So people want to feel secure. These seem to be the bigger exchanges, but I know a lot of people that use other exchanges as well. And that's the beauty of self-directed retirement investments. It's your money. So I don't want to tell you how to invest your money. All I'm going to tell you is these are the things you cannot do as per the IRS tax code. Otherwise, you can do it. It's not for me to say what you can and cannot do. So as long as the IRS allows you to do it, you can decide if you want to buy real estate or cryptos or tax liens. But again, the beauty of cryptos is, I think from a tax standpoint, clearly, is you don't pay tax. So remember, we talked about short-term capital gains, long-term capital gains, basis, holding periods, gains. Is it short-term? Is it long-term? Netting. With retirement account, you don't care. You don't even have to worry about holding periods or basis or gain, because there's no tax. Never, no tax. You will pay tax if it's a pre-tax IRA when you take it out. If it's before 59.5, 10% penalty and income tax. Over 59.5, income tax. And if you have a Roth, you hopefully are going to keep it in the Roth till 59.5, and the Roth's been open at least 5 years, and you're never going to pay tax. So you don't really care about holding periods or basis or short-term, long-term capital gains, because you're never paying tax. And that's the beauty of cryptos, because we've seen the growth in cryptos, and I have clients with huge gains, huge over the last few years. And the beauty of this is no tax. So if they owned it personally, they may have, who knows, $300,000-$400,000 in taxes that they'd have to come up with. So that's the trade-off. That's why people like using retirement money to buy cryptos. They also like it, honestly, as a way to diversify their retirement portfolio. I have again, I'm not an investment advisor, so diversification, that's something you got to figure out with your advisor or with your tax professionals or with yourself.
So it sounds like using a retirement account is the way to do it. I mean, it's no different than any other type of investing. If you want to maximize your benefits and you want to build wealth faster, a retirement account is the way to go. So, it's clear as day that a retirement account is the best way to invest in cryptocurrency if you're going to buy and hold, if you're in it for the long term, if you're diversifying your portfolio. All right, we're in. How long does it take if I decide today that I want to invest in cryptocurrency? How long is it going to take me to actually get it? How long is it going to take me to officially owning my first coin?
So I'd give yourself a few weeks. If you want to set up a retirement account to use this stuff, you're not going to be able to buy the cryptos in a day. No way. The retirement account can take 7 to 10 days to set up. And then it can take a week or so to get your money, your fiat, into the exchange. And some Coinbase, for example, will limit you maybe to 10,000 for the first week or the first month. They kind of limit you how much you can put in. So if you want to invest 50 or 100K, you may not be able to do it all at once. And then obviously you got to wait for the IRA account to set up, and then the GDAX or the institutional account at the Gemini or Coinbase to be set up, and that can take time too. There are other exchanges that you can get things done quicker though. But all in all, it's super easy to do. It's something, if you're interested, you should look at, research, do your diligence, research the coins you want to buy. Think about whether buying it personally or retirement account makes more sense, whether diversification, whether you're okay with capital gains or you'd rather do it in a retirement account. That's your decision. Obviously, I'm happy to answer any questions at any point.
I mean, what do you think about it? What do you think? Are you investing in it? What's the outlook of cryptocurrency?
Clients say, you know what, I got $500,000 in an IRA or $200,000 or $300,000. I'm going to take 10%. 5%, I'm going to put in cryptos. If this is an emerging asset class, and this is something that's here to stay. I want to get in at the early stages. I don't know. I do believe blockchain is here to stay. The technology is good. It should make the financial industries and various industries more efficient, and more, I think, competitive. But I don't know which coins are going to take off, which are going to be the ones that ultimately succeed. I don't know, but I know it's really exciting. I was at a convention January in Miami. It was over 4,000. It was the largest crypto convention ever. It was over 4,000 people. And I can tell you, there was so much excitement. I was really motivated, really excited about the space. They had a lot of just brilliant and really successful internet entrepreneurs that came up and really spoke about their belief in blockchain and the whole decentralized crypto world. So I think it's exciting. I personally, really enjoy learning about it and investing in it. I don't know if I'll lose all my money or not. Again, I'm doing it from a diversification play. I took a chunk of my retirement money, and if I lose it, I'm young enough. I will make it back. But I think it's important to have some diversification. I have some equity, some real estate. I think cryptos is a nice asset category. So it's something I really enjoy. I think it's very exciting. We're in January 2018. Who knows where it's going to go? People talk about 100,000 for Bitcoin. Could easily go down to 200. I don't know. I do believe in the technology, and I think it is here to stay. The genie, she's out of the bottle, and she can't go back in. You're not going to be able to slide her back in. So it's out here. People are looking at it. Countries, cities have already changed the way they do title of property. There's different communities looking at changing the way they're doing ledgers. Financial institutions have looked at it. So it's going to change the way we do business from a financial standpoint. I don't know how, but I think it's exciting, and it's something I'm really passionate about.
It sure is exciting, and a lot of other people find it exciting too. It's going to be interesting to see how it all plays out. I mean, we are in the cusp here of something completely new, and it's interesting to see what is all going to evolve from this. One last question for you. Do you think the government is ever going to regulate this? And I mean, fully regulate it. Do you think the government's gonna take it and say, all right, that's enough. This is out of control. We're gonna take over from here.
I think they're going to try. I think they have to, because there's too much money at stake. So we know it's not a currency. So they've already told us, okay, it's not a currency. So we're not going to treat it as a currency. We're going to treat it as property. Okay, so now we know it's property. So once the SEC, which I think they will do, I think they're going to come out and say it's like a security. So now we know that. I think SEC will get in. I think FINRA at some point will get in. And I think they're going to start cracking down on it. On the flip side, some people said, well, if you look at precious metals like gold, that's totally unregulated industry. I mean, you don't have to be FINRA approved. Anyone could sell gold or silver. You don't have to be registered with FINRA, or the SEC really doesn't look at it. I guess only maybe the Federal Trade Commission may look at it for fair trading and good business practices, but you don't have to be regulated. So I think the regulation is going to come, especially with these ICOs, these initial coin offerings. If they start hear more horror stories of fraud, I think the SEC is going to get nervous. And again, these ICOs, a lot of them look like securities offering. They look like private placements or IPOs. So I think it's a great question. I do see regulation. There's too much tax money at stake. I think government's going to be worried about people losing their shirts and this stuff. And maybe regulation isn't bad. I mean, maybe it's a good thing for us. It does go against the heart and I think the core of cryptos about being decentralized away from the government. And again, that's really where it started. It was used by, I don't want to say criminals, but it was used by people who wanted to really transact in a financial position without having the banks and government involved for whatever reason. So, and it's cool and it makes a lot of sense in some ways, but I think they need to protect against, obviously terrorism and criminals abusing it.
Well, it'll be very interesting to see what happens and if the government does step in. Mr. Adam Bergman, this has been a fantastic hour. I really appreciate all your time here. I know that your book goes into much more detail about investing in cryptocurrencies with retirement funds. So anybody that's interested, you can pre-order your copy now. Head on over to SDIRAlive.com where you can get your free copy of this book. And this is a limited time offer. You can only get this during the live episode of this show that you're watching now. So get it now, because as soon as this turns off, we're going to be heading back to the site and turning off that offer. So make sure you get your free copy. Shoot me an email, john@johnkopp.org, if you would like a personal introduction to Mr. Adam Bergman. If you've missed the pre-order offer, feel free to shoot me an email, and I'll see what I can do to get you guys a copy. But I do know there are only limited sources, limited quantities of the copy available. So I will do my best I can to get it to you guys. Thank you again, Mr. Adam Bergman. I appreciate your time, and I really look forward to talking to you again.
Yeah, it's been my pleasure. I really enjoyed talking with you and your audience, and look forward to doing it again soon.
So, all right, guys, that was the man of the industry, Mr. Adam Bergman. Make sure you check him out if you're going to do any business in this space, and you need you need tax advice, if you need legal assistance, if you're looking to set up an account, get a hold of Mr. Adam Bergman. He is the best in the industry, without a doubt. If you want to learn more, there's nobody better to learn from. So get a hold of one of his books, regardless of what you're looking at. He's got several different books talking about different topics. He's a fantastic guy. I've learned a ton from him, and I'm absolutely thrilled that he was able to talk to you guys here on the show today. So we're going to wrap it at that. It's SDIRA Live, where we talk passive wealth. View past episodes over at SDIRAlive.com. Follow us on Facebook, facebook.com/SDIRA Live, where you can get updates on all of our live episodes, as well as we can have discussions on there. Shoot us a message. Let's talk. You have questions for experts like Mr. Adam Bergman here. The more you talk to us, the more information you send our way, we can get that information out to you. We can get that stuff answered. So I appreciate your time today. I hope you guys learned something, and we'll see you again next time.